Indian equities succumbed to global sell-off last Friday as the World Bank warned against a global recession in 2023. This, the agency said, would be on the back of the central banks across the world simultaneously hiking interest rates in response to inflation. The benchmark S&P BSE Sensex plunged to 1,093 points to end near 58,840 levels. The Nifty 50, meanwhile, gave up 17,550. The Nifty IT index, which sunk close to 4% Friday, was one of the worst impacted pockets last week. The index dropped 7% during the period after a surprise increase in US retail inflation for August raised bets for aggressive rate hikes by the Federal Reserve. On a year-to-date basis, the index is down 31%, even as the Nifty 50 index is up 1%. Against this backdrop, analysts foresee more pain for the Indian IT companies, which have recently started freezing employee payouts to mitigate margin pressures.
I feel so. No, things are not looking good, and when stocks don't perform, people tend to dump it. So, what is correcting has to come to a deep value before it can rally. So, I think more correction is possible in IT. Bank will be an outperformer. Consumption story will be an outperformer. IT, metals, and there are few sectors which will underperform the market. This quarter, it will be very difficult for anyone to say. But going forward, we expect. The management will never indicate us, but we expect a slowdown in revenue and contraction of margin also.
Global brokerage Nomura also sees emerging evidence for revenue growth slowdown for the sector in the calendar year 2023 and financial year 2024. The brokerage notes, "We retain our cautious stance and believe that investors are likely to get disappointed with margins in FY23 and growth in FY24. Meanwhile, Goldman Sachs has downgraded Tata Consultancy Services and Infosys to sell from buy. It opines that a slowdown in discretionary IT services spend will be quite material and something not yet completely reflected in the street's double-digit revenue growth forecast for the industry for FY24. Technical charts too project a weak outlook for related stocks.
The Nifty IT index is down 30% so far in the current year and is showing no respite for any pullback. Every up move has seen an elevated sell-off, and as long as this index trades under 30,000, can show negative bias. Only a decisive move over 30,000 could see a breakout towards 32,000 levels. On the downside, it has a support of 26,000 mark. In terms of Nifty IT stocks, except L&T Technology and LTI, other IT stocks are on a weak note. For instance, Mphasis can easily fall another 10% and reach 1800 levels. Similarly, for Infi and Coforge, which both are having a negative pattern, can shade another points. Infi, for instance, if it breaches 1367, it can fall to 1200 levels. For Coforge, it can easily slide to 3000 levels. On a broader perspective, Nifty IT pack is looking weak and can easily fall another 10% if Nifty IT index doesn't hold ground at current levels.
This week, investors will track the US Fed's rate hike decision on Wednesday, which will guide the near-term market trajectory. Bank of England's policy rate outcome will also be monitored on Thursday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.